Good morning, welcome to the Market View for Friday the 25th of July 2014, and starting off with the 30-minute chart yesterday morning, we can see that prices were sideways, which we discussed yesterday in yesterday's Market View during the overnight session, and then the market sort of came alive around 8 a.m. We had this potential buy signal, and as I said in yesterday's Market View, any sort of rally to the upside is likely to be followed by some sort of sell signal. And here is that classic situation here where we can see that the market's been driven up to the DP level, and then the selling comes into the market. And the reason for my saying this, just to remind you, is that the daily chart was showing a lot of selling in the background, although I also did mention that we could get some sort of a bounce should the retail sales figures come out better than forecast. Now, I do believe that they had wind of them not being better than forecast by the price action that was in the market, and it's not unusual for an economic news item to be sort of released into the market before the official time. During the last 20 odd years, I've seen this time and again, and this sort of price action here seems to indicate that the market was moved to the upside to pull in buyers to look as if the market was about to turn around. And then, of course, we see the selling coming into the market with the prices coming off the high. And then we get the first selling coming into the market. We had the potential sell signal, which was at 9 a.m. And then you can see the release of the retail sales figures there, which were less than forecast. They came in at, if we just have a look here, retail sales, they were forecast to come in at 0.2, they came in at 0.1. So the market then continuing to move lower down. For the whole range from the high to the low yesterday is just 88 pips. So a bit more life in the market than the last few days that we've actually seen. And if we have a look at the daily chart, this is reflected there as well. You can see there we've got the market trading just below the psychological level there of 170, which I did speak about yesterday. It's a crucial area, the 170 level, and there you can see the market just trading below that this morning. If we remove some of these lines as we're actually through this, and this is the high where we've got resistance, I'm going to keep that one in for the time being. Just going to get the markup tool 0%, and let's just mark across and see what we've actually got here. So we've got the market finding support at 169.70, which is where we saw the buying come back into the market here and move prices higher. And then, of course, the one before that down at 169.50 as well, but we are below the psychological level of 170 for this market at this time. So we've got a situation here of the market needing to find support and trade back above the 170 if prices are to move back to the upside. We are now into 7 days down, and we look like we've got a bit of support in the market there. So let's just have a look and see what news we've got that could actually move the market back to the upside for today. Let's have a look through here. Nothing. Looking for the UK. We've got the preliminary GDP to be released at 9:30 to show, well, really unchanged from the previous 0.8. I wouldn't be surprised if that comes out slightly lower. And then over to the US at 1:30, we've got durable goods orders coming in at 0.6 for the US as well, which could give the US dollar a bit of a boost and a bit of downside pressure on the British pound there. In the Dow yesterday, another lackluster day. The market stuck in this sideways range. We can see we've got the sort of high there and a low there, so a very tight range there for the British pound at the moment. So stuck in that sideways range of around 30 odd pips from what I can actually see there. So again, it's a case of the market needing some sort of news to break it out of this sort of sideways malaise that it's started to develop. In the implied volatility, this reflecting what we see in the Dow and moving slightly lower yesterday, 9.47 for the implied, and actually dropping back below 7% for the historic. And again, this reflected in the price chart at below here. So again, fairly quiet apart from the pound being able to move just a bit more than the last few days, breaking through the 170 psychological level. Watch out for this for support today with the prelim GDP, and then watch out that the market doesn't get moved back through this later on in the afternoon with the news from the US there. Well, that's it for today, also for this week. Have a great weekend. Let's hope that the sunshine continues for those that enjoy it. I'm certainly one of those. It's nice to have warm weather and to be able to just enjoy the outdoor life while we can. So all things being equal, see you in Monday's market view. As ever, thank you for your support. It's very much appreciated. And as ever, thanks for watching.